Hey traders, welcome back to this series of candlestick patterns, and in this one we're going to talk about the abandoned baby pattern. Savage name for a candlestick pattern, but hey, they've got dead cat bounce, they've got all sorts. Traders seem to love to make these names up. Anyway, what is a candlestick pattern? Let's talk about it. How does it work and how we can implement it in our trading potentially? Does it make sense? Let's look at the textbooks. Let's look at how we do it. So I'm going to do it from a bearish perspective. You can do it either way. It kind of works both ways. You just flip it on its head. But the idea is this: you have a kind of bullish. Let's make it a little bit bigger here, guys. Bullish candle here. Then you have this here, which is a small-bodied candle. And the next day, so it's very similar to your evening star, morning star thing, but with a distinct difference. Okay, the point is now, I'm going to just use standard kind of definition here of candlesticks. Obviously, whichever settings you've got on your chart will be the most accurate. So we have a good drive higher, and this could be a kind of doji or anything like that. So let's look at this. 1, 2, 3, representing 3 days. Good bullish move up, steady uptrend, chug, 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 chug. Everybody is happy, and we get day 2, a big gap up. Yeah, a nice big gap up, so that it's literally saying, listen, we're repricing, it's a new gap, it's fine, and it holds. On that day, it absolutely holds. It's perfectly fine, it's gapped up, it's all good, bulls are happy, it's in control. You don't get a continuation, but you know what? They're not too bothered because it's way better than it was on the prior close or previous close, however you want to put it. Day 3 is where it gets interesting. This is where the baby gets abandoned. The gap is now to the downside, and that's why it's called an abandoned baby, is that there's nothing there. It's literally its own little tiny baby candlestick in the middle of nowhere, in highs or at lows, in its own fresh air, its own territory. There's no price around it. There's nothing surrounding. It's literally the smallest little arranged candlestick right up at highs or right up at lows in fresh air. That's where the abandoned baby thing comes from. The point is, you gap now lower on the 3rd day, after having that gap higher on day 2, and then you have to have this kind of downtrend move, the classical trend day of high to low, that really is just leaving that price way far behind. So when would you get this kind of thing? Now, if you've got any examples of when you've seen this, then let me know in the comments below. I'd love to see kind of what charts you've picked out that have got these. And I can think of a few off the top of my head. I can visualize them. I can't think what there was. I think I had one on Delta Airlines. We've had one. Anyway, I'll have a look at those, and if you see any as well, stick them in the comments below. But the point is, sometimes you get this when you have perceived news, right, for a stock. So you have a gap up, or a group of news coming out. You have a gap up on, let's say, a court ruling. All looks very, very bullish for it, and then all of a sudden the news is quite bearish after the market's closed, and it gaps lower, and then you get that action where literally every single person who's bought this here is completely trapped in it, because they've bought it, they've got sucked into the story, and now they are caught. And if this thing is driving lower, and not only have you got these guys who are caught who want to come out of the position, but you've got fresh shorts, fresh sellers coming in who are looking to liquidate, who are going to drive this lower. It really does just literally put the supply demand into complete supply. And obviously vice versa, you can have abandoned baby to the other side, where you'd have your baby down here. That candle would obviously be red, that would be green. Same kind of thing, fresh air, or cluster of price, a day's worth of trading just in the middle of nowhere that was really bullish and now is really bearish. So what I like about this is that it just swings from being mega bullish, gap up, the most bullish things you can see in a daily chart, right? And then all of a sudden it goes from that to within 24 hours going bang, mega bearish, i.e. gap down, big push lower. Anything like that from my perspective, I love. Intraday changing sentiment, aggressive like that. Intra-week changing sentiment, perfect. From a trader's perspective, it's really good. Let's have a look at how that would look on our intraday charts. So we'd have our classic kind of low move to high. Day 2 here, we'd have, this is our gap up. It will kind of do some work here and close there. And then day 3, we'd have our gap lower, and it will go from high to low. So those are our 3 days. How is obviously simplifying it a bit. We'd have a little bit more wiggle and action here, but you can see how that is from an intraday perspective. Good move higher, gap up. Everyone's happy. all of a sudden it does close at highs as well, or closes reasonably high. Don't get the continuation, but you know, it holds the gains, which bulls are pretty happy about, right? If you're a bull and it holds the gains after a gap to fill the gap, you're quite happy. You prefer a continuation, but you're okay with that. The next day, gap's lower, and then just pretty much aggressively sells off straight away from high to low. And the deeper that red candle is, the more bearish it is as well. Really turning the screw on those buyers. So nice little candlestick pattern. Now, when would you use that? Obviously, if you're at highs and you've moved up in a big uptrend, some form of catalyst perhaps might cause that, or even it's just general trading and good volume on a good move up. Again, I'd like to see this. I wouldn't mind seeing this kind of thing if we were in a big downtrend and this was a short-term uptrend. So we've been in a yearly downtrend, perhaps we're moving up for a couple of weeks. We get this that changes the sentiment and flips it back over to bearish, and I can use it as a kind of leverage and a filter and a trigger to get short, looking for a further move to lows. Obviously, stop wise, you're going to want to have your stop. If you've taken your short here, I think the textbooks, I would have a look at that, but I'm guessing the textbooks are going to say you go short here, and your stop is either going to be above the high of the abandoned baby, which is probably going to be quite wide. So maybe they say above the high of this body, because ultimately, you know, if it comes back and kind of undoes that work, then you're really not, you're negating the trade, right? If it does that and it comes back and starts to encroach into that territory, the premise of the trade is wrong. So you want to be out anyway. The point is, if you're in that trade, you want that as to be a last ditch effort, a gap up, people are caught, and then get multiple days of down move, and that's what you're trying to capture. So that's the abandoned baby. Let me know what your thoughts are on that. Comments in the comment section below. Do you use it? Do you think it's any good? Does it work for you? What markets you think it works in? Have you got your own little twist on it that you like to look for? Anything in the volume perhaps, or the size of these candles that you don't think is right here and maybe is better? Then let me know. I'd love to hear your comments on that. If you like this video, give it a thumbs up. If you haven't subscribed, then please do so, because we have more videos coming up about candlestick patterns. We have loads of stuff coming up about discipline, strategy, setups, analysis, all that good stuff, all designed to try to make us better traders. See you at the next one, guys.